Two. We're live.
Good morning, guys, and welcome to today's episode of Market Check. I'm Snorlax, aka Tommy, joined by Max, Tucker, and Will's Outlook panel full of great analysts and guys who've been crushing the market lately. So I'm pretty excited for today's show. I was not, present yesterday. I was having a great weekend with my family. I got some lovely engagement pictures done at Crested Butte. I can't wait to see how they turn out. But I appreciate the guys for holding down the fort while I was gone. Not that they needed me, but yeah, I mean, this market continues to require a lot from us, right? Whether it's equities and chasing some of these rotations and what is clearly a very bullish and risk-on environment in legacy indexes and obviously small and mid caps, as well as with Bitcoin. We have a range, but different from a lot of ranges. I do feel as though this range has required quite a bit of positional management, especially if you haven't entered at an extremely optimal and precise location. And that's probably purposeful, right, at the end of the day. But yeah, no, I mean, we've got, like I said, in legacy indexes, or not indexes, what am I saying, in the stock market, you have these small caps, these mid caps that are mooning and sending. Chinese stocks look good. EV stocks look good. I know the guys have been calling out some bangers on Lucid, Rivian. Both of those stocks have been doing really, really well. So yeah, I mean, it's just truly a stock picker's environment. I don't think you can have any better way to describe it. And that's something that I remember we talked about way back in like January or February, right? When we were comparing this time period to the 60s, the 70s, and the 80s, where although indexes, they had these huge ups and downs, ultimately moving sideways, but you still had these small and mid cap companies that drastically outperformed the indexes in between, in what was, by all accounts, right? I'm going to say it one more time, a stock picker's environment. Bitcoin, on the other hand, is, kind of trash to trade right now. If you're holding spot, much more comfortable, I would imagine, especially if you bought from lower. You're just kind of waiting at this point to see if Bitcoin will get that extra extension, for beta and for alts, or maybe just for Bitcoin to run really strongly, right? I mean, Bitcoin dominance, I don't feel has fully completed its move yet. ETH Bitcoin is looking awfully weak to me today, which signals that if we are going to get upside, it's likely to be led by Bitcoin, at least initially. And you're probably going to want, and we'd probably have to see Bitcoin stop moving aggressively higher before a lot of these altcoins are going to run, at least, the ones that are driven directly by correlation algos, like a lot of these alts that only trade on exchanges. I think on-chain alts are probably safer in that regard, almost like more protected and isolated environments. Not quite, I wouldn't say that they're necessarily protected from market downside, right? Because if Bitcoin were to pull back 10%, a lot of these on-chain alts would probably pull back twice as much as some of the exchange altcoins. But when you have just kind of this range on Bitcoin where it goes up and down and you get these aggressive moves, you can see these exchange alts just completely chop up their microstructures, their market structures on a higher time frame. And many have retraced, as we've talked about before, their pumps that they put in 2023, whereas on-chain alts can, they can survive a little bit longer without, or they can survive without, or before, or up until, Bitcoin really breaks down for a real pullback. So it kind of is reflective of, what's happening in the stock market, right? Where it is the perfect market to be picking specific assets for outperformance, especially when you have, indexes, Bitcoin kind of cooling off here locally. TBD on direction where we go next, but it doesn't mean you can't play around within this range, right? And that's exactly what we're doing. So without further ado, I'm going to pass it over to Max, get his thoughts on some of these small and mid caps that I know he's been looking at. I know you hit a banger with Lucid, Max. I believe, yeah, you also were looking at some Robinhood as well. I mean, there's just a lot of these stocks that are just beaten down that are really showing some strong setups if obviously the higher time frame conditions continue to hold. But Max, how are you doing, man? What are you seeing in the markets?
Yeah, hey Tommy, hey everybody. You said it really well. We're seeing a lot of small caps. I mean, outperforming doesn't even do it justice, truthfully. Some of these companies were just so bruised and battered from what happened in 2022, and they really felt sort of the bulk of the pressure and the strain from the Fed's tightening cycle. And you could make the case for a lot of them from a fundamental and a technical perspective that they were way oversold. And truthfully, I'm seeing a lot of these companies that I would consider to be sort of in fire sale territory. Um, and we've been patiently stocking them here at Because Bitcoin for months. We first started talking about IWM probably 2.5 months ago, and then we started diving into ARK and individual names within ARK, and then different small cap secs in the market, and we were very patiently waiting for these small cap companies to sort of finish, or at least you give the perception of being finished with their potential accumulations or accumulation zones. And right now we're seeing a lot of them exit these accumulation zones, and they are just on absolute tears right now. And it's really great to see some of this patience from the team and the community paying off. We didn't jump on it too early. If I will say so myself, I mean, we hit him, and we timed him perfectly. So I mean, Lucid has been one that's just been on an absolute tear. Yesterday, I called out Robinhood after hours, and it's up 6% today. So we got in that actually just after the New York close, which was a great purchase. Something else I'm watching, which I'm just starting to sort of accumulate and dabble in, is Penn, PENN. I'm potentially seeing like a high time frame PO3. Yeah, you might have to turn off Heikinashi there, but high time frame PO3. The one, risk factor to it at, this current level is that on the low time frame, on the lower time frame, you are pushing up against a low time frame range high of about, $27. So for me, I'm picking up some exposure in this potential deviation area. But I fully could see something like Penn going back to $25 or something like that and just stay ranging for a little bit. But this chart is littered with equal highs as well. I mean, first TP would be like, 30, 36.60. There's some really nice equal highs there. And then there's more equal highs at, $40, more equal highs at $45, and then ultimately there's even some equal highs sitting at 53, and we'll leave it at that for now. We're not going to get too carried away. But I mean, we're seeing a lot of setups like this across the board where, of course, there's no guarantees anything can happen, but eventually you got to ask yourself, when do these companies that are still making money, they are still operational, they are still functioning businesses, when do they finally start stealing back some of the action from these mega cap tech companies that have been stealing the show all year? So yeah, I mean, we've got a whole watch list of companies that, I mean, quite frankly, just hammering bids in right now, as a community, and we've been having a lot of fun doing it. So, with that said, funny enough, I'm actually short crypto right now. I gave this call out yesterday in our Discord. I shorted some Ethereum at 1889. Really, I'm looking and hoping for a move down, sub 1820. A lot of confluence there on Ethereum. We've got some equal lows on ETH down at 1825, and right underneath those equal lows, we've got a weekly FVG with also a daily naked point of control in there as well. Pre-impulse up. So, I mean, my ideal long setup post CPI or during CPI would be something like Ethereum drops to 1811, which I know it seems like a long ways away. We're at 1873, but I hope we can get something south of here, looking for some long opportunities. One other thing I haven't mentioned, in regards to small caps is, as a community, I mean, we were aggressively longing ARK at $40, or just under, actually, starting. And now it's at 47. And I think there's actually a pretty solid case to be made for a move up to the 50s, potentially 52 to 55. So we entered that swing trade, back at like early, end of May, early June. It's now July 11th. So we've been very patiently waiting for that to, basically exit its most recent accumulation phase. And this thing just looks coiled. And you look at every individual name in ARK, Everything is green today. All like the big top 10 ones. Tesla's green. Zoom, Roku's up 13%. Coin is up 13%. Exact Sciences up. Block up. Path up. Shop up. Teladoc up. Literally all the big ones in ARK are up today. Yeah, I mean, very interesting actually to see coin up 12% today, while Bitcoin is relatively flat. But I wonder if there's a case to be made for coin leading Bitcoin here on this next move. I'm sure Will have something to say about that. But anyways, those are some thoughts for me. We'll have a nice long discussion today. We've got CPI just around the corner. But yeah, anyways, back to you, Tommy.
Thanks, Max. And yeah, I remember we were having this conversation, whether it was over the weekend or last week. I don't even quite remember, but we are kind of reaching a point where the lower time frame whipsaws are getting smaller and smaller, which indicates to me that the market cares less and less about these macro events, which maybe means we're due for some mean reversion locally. I don't know, but respect the trend until proven otherwise. I don't know if people are actively hedging into this event. I know we were talking about this morning on the GigaChad call, but if people are actively hedging and you still have volatility potentially getting crushed today, that does set up for I would say maybe a nasty day for bears tomorrow, especially if that CPI print is lower than expected. But I have no idea what the positioning looks like. I did see something about how people were more along the VIX than they have been in a very long time. Somebody can correct me if I'm wrong on that, but I thought that was an interesting little anecdote. But I'm going to pass it over to Will's outlook. I want to get his thoughts on Bitcoin, EVs. I want to get your thoughts on coin. Will, how you doing, man?
I'm doing good. I think if you're long in the VIX here, it's not a smart move. I'm just going to be real. I know there's a lot of anticipation to get into the VIX from that level and be like, hey, this is the place. This is where we want to long. I'm telling you, I think it's going to the low lows and going to triple bottom in the eights to nines. It's pretty nuts. I definitely, it's very indicative of the market right now. It's an easy play to see. I will be longing VIX from there, but I just think if you're going into it right now with a long position, you're going to get wrecked. Personally, there's a lot going on in the market. This is the rotation we discussed literally, I think, month 3 of this year. We were talking about getting into small cats and mid cats because guess what, guys? Just like a lot of people in the beginning, we were very bearish, right? And we were like, okay, how do you catch up? Where's the high beta plays? Let's catch up to what we've missed out on. And I think that we've done that very well, capitalized on that. And, the people that invest in us, we've helped them also return those same gains that they may have lost at the beginning in Q1, right? Going in, I wouldn't even say all of Q1, to be honest with you. I think the bearishness kind of like let out like month 2, month 3 is where, people started looking more optimistically towards where liquidity was moving and where the market is. So, I mean, at the end of the day, to be a trader, you have to be non-biased to the volume of the market and the directionality of the market. And you can't take a stance of bearish or bullishness. Either one. You can't trade either side. You have to trade momentum, right? You have to trade volume. You have to trade what is going on in the market and how can I capitalize on it, whether up or down. Doesn't matter why, right? It's whether up or down. And we were able to see that the trend was switching to up, and we were able to identify that and move into those positions. Granted, we had to position ahead of a lot of the market, which means what? It means that you're just sitting there in, consistent sideways chop action, but you're accumulating with the market maker, right? You're not accumulating the pump. You're not accumulating to catch the mid move. You're accumulating with the market maker in the boring range where nobody wants to trade, nobody wants to buy because it's just, there's no price action, right? Rivian and Lucid were very indicative of that. A lot of people were like, they ain't going to move. They're not going to do anything. And they were told like, hey, this is something you really got to pay attention to. I think the ARK move was really interesting. We were discussing that. I think I want to say month 2, month 3 max. And the ARK move was legitimately looking very much like the fear and greed chart, where it was at the low end range of the chart. You're in that accumulation range where everybody's fearful, nobody wants to touch it, and it's ready to blow. And I'm telling you, ARC was one of those things that I think will be, if these high beta low caps are playing, ARC is going to benefit hugely from this. They have so much high beta on their balance sheets. It's actually insane. So yeah, I think that a lot of people are going to fade a lot of these moves and continue to say, hey, stay sidelined, stay this. Look, I'm not going to lie. They have an argument. But at the end of the day, it's kind of like what Hagrid said in one of our spaces the other day. He's like, hey, whether the market's bearish or bullish, if you're not on the right side of the train for multiple months, you were wrong. It doesn't matter. Like, yes, the macro could be very bearish, but if you were on the wrong side of the trade and the trade was up for multi months, you were wrong. And that's one thing that I try not to be. I try not to be wrong. I try to follow the market. I try to move with the market. I don't care about bearish or bullish. I know there's a consistent consensus that you have to be one or the other. No, you have to move with the liquidity. Wherever the liquidity is moving, you're looking to shift ahead of it. And this is where it's at, man. Low cats, mid cats. I think there's still lots of opportunity out there. I think it was one of the community members in our Discord, TradeOX. Basically he had brought up Roku. I had Roku on my radar, just haven't watched it in a while. And I'll talk about coin in just a minute. And I was like, man, this thing looks really good. Am I able to share charts real quick?
Yeah.
Okay.
Give me 1 second.
Yeah.
All right, you are up, Will.
All right. So I find this very interesting here. And again, I know a lot of people like to look at it at low time frames. They like to look at it 4 hour, 1 hour. I consistently tell people, I'm like, hey, if you're looking at the stock market, look at it weekly, monthlies. Because yes, you could be trading a low time frame drop, but you have to look at where you're at in the chart on the overall too. Or, are you in the upper range? Are you in the lower range? Are you trending to the upside? So on and so forth on a higher time frame. And then you can always, I like to take it like this. I'll give you guys kind of my MO on how I look at charts. If I'm trying to trade lower time frames, I'm going monthly and I'm working my way backwards, right? And then I'll drop it down to the daily, see what I can play on the daily. And then I'll drop it down to the 8 hour, see what I can play on the 8 hour. But I'm acknowledging where I'm at on the overall market before I try and make a move here. Because while the 4 hour could say resistance, your monthly could be saying potential for a breakout because of how close you are to the high end range, right? So you always have to be in confluence, I would say, with your trade on your high end time frames and your low end time frames if you want to be successful in this game. I think this is a very key pivotal moment here for Roku. I think if Roku violates this area and starts getting up here to like 86, 87, like where's your stop here? Where do you stop? There's no resistances. I guess you could try and call the left shoulder over here resistance, but like, where's your resistance? There's nothing. You are going to flush straight right back up if you get right back above here. And it's not going to be one God candle. I'm not going to come in here and try and overbull you, but like you're just going to start moving for it. That's what's going to happen. This is literally going to be a V/U shape recovery with no real pullbacks. If you get any pullbacks, it's going to be wicks as you're rising into it. So I think paying attention to charts over news is the more important game here. I think, and that's what a lot of people don't really realize. You look at something like coin, like so many people are freaking out. Here's the thing. I think coin's doing really well, right? And it's broken above key resistances, key positions where there were predatory moves. And that's typically what I look for. I look for price action to recover above previous predatory moves, right? You're probably like, what is a predatory move? Well, you have your flush and then predatory move, right? And then predatory move. And now you're starting to get above that. And if you get above the previous predatory move, there's really not a lot of resistance from there. You're basically moving to here, and then you can trend up to here, right? There's not a lot going on. You've already broken this resistance. This is your next resistance. This is your next resistance. You got 3 more levels to make it through. Now, does that mean that we continue trending up? We'll see at the end of the day. Right now, we've got a bullish trend, right? Regardless of how we look at it, it's a bullish trend. and the market should continue to trend up. If the trend breaks, now I'm looking for the trend to go the other way. So the bottom for coin could be it. It just all depends, right? It depends on, does the trend hold? And I think once you start getting past certain levels, like these higher time frame levels, like, obviously here, you've gotten above a very important level, in my opinion, because you've had solid resistance on body candles all the way across here. Look, solid, solid, solid. You've basically gotten above it and you're holding above support. What do I not like here? I'll tell you one thing I don't like here with coin, and this is a very key item I'd say to always look for, especially on higher time frames, is you don't have a wick, right? You never want to see a body without a wick, because if you see a body without a wick, you're going to get wrecked, whether it be to the upside or downside. So more than likely, I don't care how high this thing trends, it's going to come back and it's going to fulfill that body. This is not a good look. That's a FVG that will get filled one way or another. Yeah, so that's the way I look at coin as a whole. I think there's room for upside, but until this FVG gets filled, like I'm not interested in saying it's going to go all the way back to all-time highs. Definitely not interested in that. If it were to do this and roll over and come back, revisit, fill below the FVG, boom, okay, we can talk about it from there, right? But like if your body is still sitting here with no wick, I'm not willing to bid that in a way that would be sustainable. I would definitely see that coming back. I mean, you could bid it on a trade. I think you could bid it on a trade if you break above, key resistances. But like outside of that, man, you're gonna get screwed. This is another interesting one too. I want to kind of bring this one up. Look at Roblox. It's now breaking out of its pennant low, and this is exactly what I was expecting. I was expecting it to roll this way, and that's exactly what it did. Because typically pennants are continuation patterns, but I was just like, man, this is very indicative of them trying to swing up this way, because they just kept building it, right? They just kept building it. They came down right here, double bottomed basically, and then started building higher and higher and higher. And now the reality is, where is your resistance here? Your only resistance right now on Roblox is right there. In my perspective, some people look at wicks, some people look at bodies. I like to look at bodies. If you get yeah, good.
Are Roku and Roblox both ARC holdings?
Actually, I'm not sure on that.
Is why I'm asking.
Yeah, I'm not sure on if they're both. I think Roblox is. I think a lot of big players.
They both are. Roku is the third largest holding by market cap in ARC, and Roblox is it looks like 10th.
Yeah, Roblox is like the most solid player-based game out there. And some of you are like, oh, you guys talking about game. Look, you are talking like stupid amounts of people that play this game. And it's adults and kids. And some of you be like, well, kids don't bring revenue. I'm telling you, these kids get their parents to buy the Robux, 100%. All of them. The kids probably have the highest revenue out of the entire game. It's pretty crazy. And you got adults in here too that are buying. So ultimately, you are kind of trending sideways from a higher time frame up here, but you've got a double bottom. This is very indicative for me for this thing to break out, right? I pin it basically off the wicks, but you do have a trend sideways price action move here. I think you get above here, it's going to be very much like ARC, because there is nothing here to stop you. You're going to go right back to the highs. And once you get back above here, you're not coming back down here. You are now in your trading range, right? And your trading range is up here. So now you're going to trade here. And then where do you go from there? You could go up, you can go back down, whatever. But like this is what I'm looking for Roblox right now. I think it's a really solid play that people should be paying attention to. Specifically. But yeah, yeah, that's basically what I got. I don't know, like yeah, I want to bring up Lucid too, because I think just a lot of people don't understand the substantial move here for Lucid. Look at the higher time frame. That's basically a double bottom, right? It's a double bottom move. You put it on the weekly, which is what I like to use. You get above this resistance right here around like 830. You close above that. You're gonna break for the $11. You're gonna probably pull back to the 8 again, right? You'll revisit 8, and then you'll probably break out all the way up to 17. I like this thing's it's gonna be a monster move. Previously, Lucid's done things like this, right? This is very indicative of interest in this stock, in my opinion. I don't think somebody would have bought a lower low if they weren't interested in this stock. 100%. Not of this size. I don't think this was a predatory move. Why? The wick came down. Now you got drop, 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 drop. That drop is slow. Predatory is up and down. That's what it is. It's a push in to recover the entire move. That's predatory. This is not a predatory move. This is a high interest zone. And so once you get above the same zone that I'm telling you, right? The same zone I'm telling you right here. Once you get above this zone right here, look at your interest in that price action zone. That's your interest. This thing could very well prove me wrong and just go straight through, right? And retest the highs. Double tap highs, roll back. People think it's going to come back down to the lows, comes back, finds support at 1150, and starts moving uptrend from there. That's what I'm looking for right now on Lucid. Like I'm very high conviction play for me. I think ARK, hey, we just talked about it this morning as it was starting to break, right? As it was starting to break. And I basically said this morning when we were talking about it, I was like, look, you get above these 2 wicks, it's gone. It's gone. It's going to literally just run for the highs. And that's exactly what it's doing. I think 5387 it's in the books. It's cooked. It's going to do it. Right? It's got that magnet. It's going to pull up to here. It doesn't matter how many weeks, how many months, you got the long position for here. And, we were talking about bidding. I just want people to be very clear, in here. In here. So you're talking 35, and I posted it 42 to 35. You're now sitting at 46. So, and your upside is all the way up to like 54. Really, really good upside. Really solid position, in my opinion, if you're looking at something like ARK. But yeah, and I think even Rivian, I think like a lot of this right here is more of a shakeout than it is a drop. Like I don't think Rivian's going to come back and recover the entire move. I think Rivian's going to kind of play the upper range here and then make another move. Why do I think that? Look at Palantir. It's doing exactly that. It's trading sideways, accumulating to make its next move. While a lot of people are thinking accumulation drop. Right? Or they're probably even looking at this as accumulation. There a lot of people here's the problem with a lot of traders right now. A lot of traders are looking at this like, oh, we're at resistance short. Oh, we're at support. Let's short again. They're not even looking at long positions on a lot of these. They're literally just trying to short it because they think that it's going to break to the downside. But the reality is like when you pump, accumulate, you pump again. That's how these moves work. And I'll touch on one more thing and I'll throw it over to Tucker. Bitcoin, right? I consistently, man, I get DMs, talks, all this stuff. Like, where do you think Bitcoin's going? Where do you think Bitcoin's? Look, you already know where I think Bitcoin's going. You already know. Like, I don't know, what the discussion is. I haven't changed my perspective on Bitcoin, and I'm not talking to the team, obviously. I'm talking to the people that literally I say the same thing every single day. If my bias changes, I will post it. 100% I will post my bias based on it. My bias is, and it's not just bias, it's not thought or hope. It's price zone, right? It's 35K. That's what it is. That's my position I'm taking. And either I get it or I don't get it, right? It doesn't mean I'm right or I'm wrong. It means that I'm looking for this price. I'm not looking for this price off hope. I'm not looking for this price off of somebody told me. I'm looking for this price off of basically previous support. That's what I'm looking for it for. I'm looking for previous support to be recaptured. I'm looking for most of the flush move to be recaptured. And a lot of people are looking for here because they're anticipating the entire flush to be recovered. I don't think that happened yet. I don't think that happens yet. I think it does happen. I just think it happens later. I think the flush comes up to the previous support, then rejects, comes back down, and then recovers the entire move. And then from there, guess what? You're not going back below here. Right? That's it. Now your support's been established. You basically violated. You hit it once, violated it the second time. Now your support is 35K. So I think that'll be a key point in the chart to be watching. But yeah, that's my thoughts on that. If I'm gonna kick it over to Tucker and let him chat a little bit. I've been talking a lot. You can have the chart back too, by the way, Tucker.
Oh yeah, I'm gonna need the chart back. I'm gonna need that. Can you guys see this?
Yes.
It's over for Palantir, fellas. It's over. Kramer said he liked it the other day.
Oh,
Yeah, I'm sorry, Will. I'm really sorry to tell you. No, but let me go back to what I was looking at, which is even more suspicious. Yeah, there it is. I mean, what are you gonna say about that? Higher for longer at $99 on TLT. It might be time. It might be time. So yeah, those are just some little anecdotal things, but this is actually pretty interesting. Let's see. I had a squiggle drawn, and it seems to be playing. Now, obviously the Kramer counter signal counters my deep pullback into here, maybe a little bull div double bottom type of action, but I mean, this is still basically what I think. We're sitting at range lows. We're kind of hanging on by a thread. I mean, I would be shocked if we didn't come into here. TMF looks a little bit worse, actually. I guess I did have this thing drawn, but I mean, if I get rid of this, like, you know, we've broken the horizontal, right? Like we've broken that. I don't see why it doesn't come at least down to 645, but I don't know. I still like scaling in, you know, down in this whole region. Like I think you're gonna thank yourself for scaling into TMF down here. You know what I mean? So that's what I've been doing. But yeah, recently, I mean, we've been killing it. I think Lucid continues to rip. I think Hut, this is one we haven't talked about in a couple weeks. I mean, what are you gonna say? Like, you know, we probably come back 370s, but I don't know. I don't know if you get sub threes. I mean, this is pretty parabolic, honestly. If we came back to sub threes, I would definitely buy more actually, but I don't know. I mean, I think it's got a chance to keep going. Like, yeah, 425s. I like that. But I guess more generally speaking, this is something I was looking at, and I sent some pictures and a little analysis in our Discord the other day. The jaws are open, right? And I know everybody on Twitter has been tweeting this, and this is like super mid curve, right? But nonetheless, I still think it matters. And I don't know where you line this up exactly, but you know, the jaws are indeed open, right? This and something I was looking at. I'm gonna put this back down here. Was 2018, and this lines up with actually a lot. Where's my I have too much stuff on here. I'm so sorry. Yeah, we'll just do this. Okay. So basically the last time these jaws opened was 2018. Right. We had the divergence. So I took it from the top of when this started, which was this down candle, until it started nuking, right? So this whole time, SPX going up, net liquidity. This is global net liquidity, by the way. So I think it's us, China, Europe, New Zealand, Australia, all the central banks minus RRP and TGA. So this goes down, SPX goes up, took 196 days of that divergence until it broke. And this was, that was Volmageddon, if I believe. Wait. Yeah, it was. Anyways, if we took the same thing, right? I think where did I put it? Anyways, it was basically right here. So let me take the date. This is super simple, right? Just 196 days gives you Monday, October 16th as the day of reckoning. Obviously, we're probably not going to get it to the day, but we should see some sort of corrective action in this divergence in Q4, in my opinion. Because I mean, this is pretty stark. Like this is, probably even more stark than the 2018 divergence. So yeah, I basically took it from here to here. Yeah. So I mean, it's hard to think what this does in the meantime. I mean, we're basically at the lows from September. Which, obviously that's part of the reason for the thought, right? Is like this is a massive divergence as well. Where was the low? You know what I mean? Like that's gotta correct. So I don't know. I think it kind of lines up with everybody's theses that Q4 should be rough. Given the fact that these rate hikes should have worked their way through the economy a little bit more, given that Bitcoin usually nukes about 150 days before the halving, there's a lot of things lining up with Q4 being not great. Tax loss harvesting, like Will says. So yeah, I'm looking for that. In the meantime, like we could talk about tomorrow, we could talk about CPI a little bit. I think in the meantime, like the rest of Q3, I don't anticipate any crazy, downside, honestly. Like we're a little overextended, but I don't think we're at the point where we need to correct 5% even. I think we can kind of continue grinding here and go a little bit higher. And, like we've said, it is kind of a stock pickers market, right? Like it is, it's risk on it. Small caps are sending, but you gotta know how to pick them, right? So I think we kind of continue that regime. I don't know why the VIX would change its regime right now at all. So tomorrow I'm thinking we get like a 3.0, 3.1, even a 2.9. Market likes it.
Bro, 2.9, can you imagine? Would that even be bullish, or would the market be like, wow, the Fed literally slammed on the brakes raising interest rates? We're flying through the glass, we're flying through the windshield, and we have serious deflation. Would that even be bullish?
That's my question too, is like,
No, it wouldn't
we're
be.
at 4% right now. That would be 110 basis point chunk down. That would be pretty scary.
I kind of think the most bullish scenario is literally just 3.1, like exactly what's expected. The show can go on for longer. I feel like if we come in low, like it's actually not good at all. Like that's seriously bad.
They've been their consensus has been on the money the last like 6 months, like to the basis point, right? So
Yeah.
I'm not fading the experts anymore.
I actually brought up a while ago, I think in one of the spaces, that deflation is our biggest risk here over inflation.
For sure, it's worrisome.
It would be rapid deflation.
That we've chunked off so much, like without most of the rate hikes being in the system, right? Because it does take 12 to 18 months. Like that's general consensus, 12 to 18 months. Like we started the rate hiking cycle in March of last year. we've probably got a lot more of these rate hikes that need to, I hate the phrase, but like work their way through the system or whatever. And we're already at probably by tomorrow around 3%. So what happens when all these 75s just boom, 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 boom hit the economy? Like we're probably going deflationary, like, which is not great, you know. So yeah, that's something I was talking to Joe Consori last night, and he was saying the risk has 100% flipped to the downside with inflation. He's like, the inflationistas are wrong. The risk is deflation at this point. So yeah, that's what I'm thinking.
So you're thinking October, Tucker, when these jaws will clamp shut potentially?
Yeah, I mean that's just if we, you know, exactly repeated 2018, which I'm sure we won't do, but I think that 200-ish days is probably a decent time window. So I'd just say probably sometime in Q4 would be probable.
Mm-hmm. I mean, that makes perfect sense to me. After Q1 didn't, turn out to be as bearish as a lot of us thought, my timetable basically moved to the end of the year, give or take. Like I just didn't. I just figured if we didn't finish like a final capitulation or like dive down in Q1, then this year would ultimately just sort of be bullish. Because I think Will pointed this out in another show. If you go back and you actually study how Q1 affects the rest of the year, Q1 really can paint the picture for the remaining 3 quarters. So when we had a relatively bullish start to the year, look at where we're at right now. So
Yeah. Yeah, I mean, I don't see why they don't just keep grinding it around for the rest of Q3. I mean, yeah, I don't see why not. Like I don't think positioning has flipped too much to the point where it warrants us to like start nuking through the floor. Like I think that point will come, but I mean, until then, it's just kind of a continuation of what we've seen. So, like we said, it is just kind of a stock picker's market right now. But yeah, I don't see big change.
It's a little difficult to forecast significant downside in the summer when a period is like very historically low volatility. At least that's how I kind of view it at the moment. I agree with you, Tucker. I mean, there's probably going to be a time at some point this year where the jaws obviously clamp shut, but it's tough to predict it, in my opinion, in the summer, just for very obvious like seasonal factors. And I mean, in general, like Q3 is more bearish than Q2, I believe, historically speaking, as well, especially September. So just going to add that.
yeah, I think you're going to see a lot of profit taking going into the end of the year, truthfully.
Well, that's the big reason that September is always so bearish, is it has a lot to do with like window dressing from both the year, summer. A lot of times during the summer, we kind of just float higher, like I said, on no volatility, no volume. So,
Well, you got a lot of people that are basically maybe going on vacation, doing different. They just stop trading, right? They stop selling, they stop buying. They're busy doing other things, and because they're busy doing other things, you get a market that continues to drift based on just passive inflows, right? So passive inflows outweigh selling because there's really no sellers because the sellers are busy. And then once you get the sellers back in towards the end of the year, you start getting tax loss harvesting, start getting profit taking. There's a lot of things that balance and rebalance positions, I think, towards the end of the year that can really bring a decent drawdown, aka a good buying opportunity, is the way I would take it.
I agree, especially given the strength that we've seen from this market right now. You are inclined to want to bid, dips that are, I guess, mean reversion dips at this point until the economy fundamentally breaks down, which I mean, I have seen people talk about that potentially occurring in Q3 of this year. So maybe we do see some turmoil in Q3. But the downside is TBD, right? Like, what does it look like?
I think if we see it in Q3 to be towards the latter half of Q3, right? It'll be that last month of Q3 going into Q4. Like really the reality is anywhere is that last month of Q3 going into Q4 and anywhere's in Q4, you look for the drawdown, right? And then once that drawdown occurs, you look for the support of where that drawdown could come down to. Don't be stupid and look for deeper. And then, take those as buy positions and, pray for upside unless the market's going to turn the other way in Q1 of the next year, right? And then at that point, you got to cut your losses and then let the market do what it does, draw down to wherever it draws down again, going into Q3, Q4, and then start bidding again. So it's a rinse and repeat process. You'll take hits and nicks along the way, but if you just stick to the plan of that strong Q1, weak Q1, I think you'll be profitable.
So what are we thinking about CPI tomorrow, guys? Because I see we are getting into time. I wanted to get y'all's thoughts on, I guess the macro event. I know I said at the beginning of the show that it has mattered less over the last, few prints, especially as CPI has been in a consistent downtrend thus far. What are we anticipating for tomorrow? Are we anticipating, they've been pretty good at forecasting these prints, which I guess has a lot to do with the muted volatility on them. But are we expecting to, come in below 3% month over month? What do you guys think? And as far as trade opportunities as well, what are you guys thinking? Because the whipsaw to grab liquidity and fill limits is no longer as viable as it used to be, unfortunately.
Yeah, I would take it. I'm glad I'm seeing the market pull back today. I would like to see the market pull back again, right? Going into CPI, because I like pullbacks into CPI, right? I don't like breakouts into CPI because breakouts into CPI means you're probably going to chop the range for longer, right? Even if you're not going to break down, you're going to chop the range for longer. It means you're at the high end range of the zone. You're more than likely going to pull back to the low end range of the zone, and there's no confirmation of a breakout yet. So I'd like to see more pullback into CPI. I like to see the fear in the market and CT Twitter panic everywhere. But this is just and I haven't even been in tune with CPI just because I don't care anymore. Like I'm just being real. Like I already know the directionality of inflation. It's down. Whether it's stagnant, it could be stagnant, could stay at 3%, but it's going to go down. And my fear here is not inflation, it's hyper deflation. Because hyper deflation is not a beneficial environment for assets at all. You are basically getting negative yields in a hyper deflationary environment because there's no growth, right? Inflation creates growth, growth creates investing through assets, and that creates up only, right? And deflation promotes non-growth. And now I want to be clear because it creates strong dollar, which creates why should I invest when the dollar has more strength than the asset? And then you start to get sell-off in assets based on the dollar being stronger, and that creates more strength in the dollar, and that creates turmoil in the market and downside market, right? Now we could see that next year potentially. That could happen, but we'll know it in Q1. I would say watch January, February. You pay attention to those 2 months specifically, you'll know the direction of the rest of the year at that point and just play that as your directionality.
Tend to agree. I do believe inflation will matter again when the trend is no longer basically just essentially just straight down. But I do know we are reaching a point in inflation where it's probably going to get stickier. So I'm curious what that does for the market. Tucker, Max, do you guys have any thoughts on CPI tomorrow and kind of how is there a turning point for CPI potentially on the horizon? I know we've talked before about maybe August or September, which I guess lines up pretty well with the date that Tucker had in October.
Yeah, I think I totally agree with what we've already discussed, what you guys just mentioned. I think that we're at this spot where they sort of have to thread the needle in a way where we have to see it continually drop, but not by too much. So I hope they continue to massage things and we can push it, we can kick the can a little bit further down the road. So just hoping for like 3-3-1. Um, I don't want it to. I don't want to see us breach 3 tomorrow. I think actually in that case, the probability of a cut would actually be dramatically moved up, which would be good for TMF, of course. Um, but I think that I'd rather see that happen as we get closer to Q4 than right now. I think we still have a little bit of cleaning up to the upside to do. But yeah, and one small favor from the audience, if you guys could please help us get to 20 likes. We're at 17 right now. You guys always help us run the range high of 20. So it'd be great if we can keep that streak going. We need 3 more likes. If you could just take one moment, quickly hit that thumbs up, I'd be greatly appreciative. Thank you.
What are you thinking, Tucker?
Yeah, I mean, I tend to agree. I mean, like I said, I think we get a big chunk down. Okay, I'm not fading the experts anymore. Like 3.1. If they say 3.1, we're probably gonna hit 3.1. So that's fine. I think 3.1 is bullish. I think what really matters is core inflation. And if it's sticky. And at the end of the day, like we've been talking about deflation now, like if like sticky inflation is sticky inflation around 3.5, between 2.5 and 3.5 on headline is probably ideal, honestly. If that means avoiding deflation, that's probably ideal for markets. I think markets would be a lot more spooked on us, like eventually in a few months printing like a 1 handle than they would us continuing to print like 3.12345. Because I think at this point we know we're not going back to 9%. Like we're not actively printing money. So yeah, I think for markets sticking between 2.5 and 3.5 is going to be ideal. Like that's probably what Powell's talking about in the back room is like, yeah, we're gonna have to keep this. Like I'm sure they realize the risk of deflation at this point. So yeah, I mean, I think anything with a 3 handle and under 3, that's the other thing. Like, what if we missed the upside, which I don't think we will, but like if we print like a 3.5, what does the market do? I think that's probably your range is like between 3 and 3.4 is bullish, and outside of that, up or down is probably either flat to bearish, in my opinion. I think we probably need to see core like 4.5. If we get a big chunk down in core, they're probably going to price in more cuts through the end of the year. So that would be nice for our bond positions. But yeah, that's what I'm thinking.
I do want to point out too, Tucker, like you brought up an interesting situation. What if we ticked up, right? I honestly, I think the market would try to bid that, as weird as that sounds. And the reason I think the market would try to bid it is because I think the market would take it as, oh, we're not in a hyper deflationary environment, right? We're bouncing, we're holding the range, and we're going to slowly drop down to 2. So because we bounced up, that's a good thing. And I think the market would just take that as a confusing situation and try to bid that situation as a positive more than a negative. I don't think the market thinks exactly like what you said, right? When you said we're not going back to 9, that's what the market sees. The market sees we're not going back to 9, so a bounce is not a problem. A bounce is good because a bounce would mean that we're not going to get hyper.
When you say a bounce, are you meaning above, like if we ticked up as if we were at 4 or something?
If we ticked up in general, right? If we ticked up in general,
just above consensus.
Above consensus,
not
exactly.
Above last month.
No, above consensus.
Okay, yeah. I think
a slight tick above consensus, I think, would be bullish.
Yeah, like if consensus is 3.1, I mean, I think you've probably gotten to like 3.4, 3.5 to remain bullish. I think if you print like a 3.6, 3.7, people probably don't like it just because that's so much above consensus. They'd probably be like, "Oh, what's going on? Like, are we going back?" You know what I mean? Like,
but I don't think that would be bearish. I think like in that scenario, 3.5, 3.7, you would get chopped, right? You're not going to break out at that point. You're going to chop sideways.
Yeah, we should get a big chunk down regardless. But yeah, I agree.
Yeah, whatever your range is. So like Bitcoin, for instance, right? Let's say we got a 3.7 or even a 4. We could see Bitcoin, run its low range all the way back down to 25, for instance. Something like that. That's still the range high, right? So like those scenarios could happen, but like it's not really a nuke in a sense from like a higher time frame standpoint. It is from a lower. You're gonna get destroyed from a lower time frame standpoint, but a higher time frame standpoint, it's basically a range sideways.
Yeah.
Yeah, it is. Yeah, well, it'll certainly be interesting tomorrow, guys. Another fun day trading a macro event, right? More interested to see kind of how it affects positioning in the aftermath, right? One of the things that we were kind of talking about when we started the show was you have a lot of people who hedge into these events, and as those hedges roll off, price can go higher. So let's see what we get tomorrow. I am cautiously optimistic that we can see upside here as a result of the CPI print, but I never know for sure what to expect from these days. So yeah, no, I appreciate all the insight from all you guys. Did we hit the did we run the stops at 20, 25 likes?
We did. They
Oh,
always come through for us,
wow.
man. We got 22 likes on the table right now, so
You guys
they
rock.
did it. They always come through for us. It's beautiful.
Yeah. Thank you guys so much for helping us run those stops. Thank you for spending your Tuesday morning with us, looking at charts and talking about markets. We appreciate you guys a ton. If you enjoyed the content and haven't liked the video already, make sure to do that. Hit the subscribe button if you really enjoy the content. And if you really, really enjoyed the content and the show today, make sure to check out the link in the description of this YouTube video, as well as the link tree in our Twitter bio for all of the access to our premium content. But I can't think of anything else to talk about today. Like we were saying, we have a big day with CPI tomorrow. It's an interesting market with plenty of opportunity, as we can see. So yeah, keep your eyes out and stay safe for tomorrow. We appreciate you guys for tuning in, and thanks so much. We have market talk real quick later this afternoon, so make sure to tune in for that as well. But that's all from me, guys. Have a great rest of your Tuesday, and we'll be back tomorrow. Thanks.